But why are so many Americans down on a strong economy?
You're listening to the Let's Make Sense of This Thing Called Money podcast, where we view money as a tool, not just a number. Now for your hosts, Stephen Jones and Tucker Lee.
Well, how have you been? I haven't seen you or talked to you
I know
in like a couple weeks.
things have been good. We
Yeah.
staying busy, trying to find new ways to help people and set up people for long-term success so they can hopefully retire, and then helping some people with who are about to retire, kind of planning for that. So we've been busy. But I guess more excitingly, today you did this recently, I think last Friday, with your family. We are going to the zoo here in Amarillo, Texas shortly.
Nice.
So
nice. How is the zoo in Amarillo, Texas?
Well, I saw one of my clients at a local coffee shop this morning. We were joking that they got a new dog as an exhibit, and then I joked, I think they have a mule. You don't see a lot of mules anymore, so that's exciting. No, I think it's I'm joking. I think it's pretty for a smaller city. I think it's a really well done zoo. So when you walk in, they have a spider monkey island, so it's got a moat around it.
Okay.
The spider monkeys live out on the island, so
yeah, we might have to come check that out.
Yeah. How about yourself?
We went to the zoo last week, and it's good. They've done a lot of things. They have a new Africa exhibit, which is pretty cool. So they've kind of moved some things around where you can see them a little bit better.
Yeah.
And stuff like that. So, and then the like aquatic center where they keep the seals, they're redoing all that. So it's not bad for a nice getaway and have a picnic and all that. But we'll have to come check out the Amarillo Zoo.
Well, I've heard the Oklahoma City Zoo is very well done. So
we've also got a science museum. It's called the Omniplex when I was a kid, but now it's just called the Oklahoma Science Museum. And you can even have fun as an adult. So it's
that's good. Yeah.
So, well, what are we talking about today?
Well, Stephen, I think this is a topic that a lot of our clients, we discuss with them a lot, and a lot of folks, have a kind of negative attitude about the current economic situation, even though recent economic factors have been strong, and a lot of experts predicted we were going to go into some sort of recession, and that is yet to materialize. So unemployment's still really low. Wages have been rising. The market's been up. The rate of inflation is still not where we want it to be, but it's slowed significantly. So despite, we have all these kind of positive trends and over the last several months, but why are so many Americans down on a strong economy, I guess, is the question we are here to try to answer today.
I think it's interesting because for you and me, we kind of have to remove ourselves from the general public because we do this every day. So when I look at the stock market, whether it's up or down, doesn't really affect my mood. Maybe because we're so used to it, right? Like every day. I mean, I don't even look at my own account every day, but I always have a general idea of what's going on. So I found this interesting because I think the news has a big part of this, plays a big part of this, because there's so many stories, just even little bitty stories that are negative that can alter your train of thought. And maybe that causes you to do something with your investments that you should not have done based on emotion. And so I think the news is a big part of that, and it has been for a while, and I don't want to get too far down that rabbit hole.
Sure.
But I think there's a lot of things in the world and that are made to make us have a negative mindset, and just the ease of information. I mean, it's on my phone, it's everywhere. It's in your face, and so that can negatively affect how you view your life and ultimately the economy.
Right. An investment company we both do business with, they had a psychologist on, had a webinar for advisors, and they had a psychologist on, probably 9 or 10 months ago. And he made a good point that, we're blessed to live in a time that, is one of the safest times in world history, but mentally, I think it's one of the hardest times for humans to try and live their lives, just because of, as you mentioned, the news cycle, but on top of it, the all the technology and now different sources of information that we have coming at us every day, and obviously social media plays a major part in that. But we as people have so much information coming at us that we have to break down and analyze, and a lot of that information is just, unfortunately, just noise and isn't really relevant to the long-term outlook of our lives. And I think that especially goes with our investments and our retirement investments. So
Do you think people are negative because they don't know where they stand in, let's say, their financial life? Not necessarily retirement, but like, do you think they're negative because they don't have a handle on their finances? Like, I wonder how much that plays into this negativity.
I think so, for sure. And we both do long-term financial planning, and some folks are all on board and want to help us put in that work. And then other people, unfortunately, they choose not to do that. I think if you don't do that, it's really easy to get tied down by emotional responses that unfortunately may hurt you down the road. So it's just, I think the biggest challenge we as people and we as advisors have with our clients is trying to get them to remove themselves from looking at short-term things that may not be really factual or relevant to their long-term planning, and try to picture ourselves of what our ultimate goal is. If you're 35, what do you need to, what do things need to look like 30 years from now for you financially to meet your goals, and trying to get people out of this short-term emotional mindset. And that's getting harder and harder to do, I think.
Most of this is short-lived. I mean, the things you and I have talked about just in the past couple months are old news, relatively speaking. So all this stuff moves so quickly. I did a plan this week. I delivered a financial plan this week to some new clients, and I thought the wife was like going to jump out of her chair. I mean, she was so happy to finally see this in a visual format, and because they had done all this stuff and they actually felt like maybe they were saving too much, which you don't come across those people that often, but they were trying to decide, should they even hire a house cleaner? Are we saving so much money that I can't even pay to get my house clean, or have somebody cut the lawn? It's nice to see that somebody is that involved in their financial life that they get so excited they're going to jump out of their chair. But you're right. I mean, I think there are some people that don't care. They don't want to look at it. They don't think about it. But then when something bad happens or an article comes up, they start to feel negative about everything, the world in general. One way I think to kind of correct this, if you can, is to get rid of watching the 24-hour news cycle or social media, whatever you want to call it. I personally, I took Facebook off my phone. I don't have any of the big social media platforms. If I want to look at something, I have to log in on the computer, which I'm sure some people are laughing at me right now. And I mainly read my news. The articles you sent me, I read stuff like that. I don't really
Yeah.
watch the news. I don't watch the opening bell or anything. I prefer to read it and then let myself dissect it that way. So I think those are some tools that people can use. And then, like you said, I think you really just need to sit down and look at your finances, because if you're positive about what you're doing, whatever happens out there is not going to
Yeah.
affect.
Absolutely. I think that's a good point. And I do the same. I don't have any social media either on my phone. And I think that's really been a positive thing for me. And it's also obviously just a distraction. You just remove the negative stuff. It's been a distraction for me. So I don't have it because of that. But another thing to your point, I mean, I think having a long-term plan, and then whether it's your retirement or some other investments, is, not looking at that stuff every day, because we're in this for a long-term plan and long-term investment. And there's going to be significant highs some days and cycles, and there's going to be some downside in some days and cycles. And we're
Mm-hmm.
looking for the ultimate long-term plan. So I think it's a positive thing if you can help yourself from looking at that stuff every day. I think you'd be a lot happier as well, and that would help people's overall attitude about this stuff.
I always like to tell people that red and green box that's at the bottom corner of your news screen is not your account. So the Dow Jones, the S&P, NASDAQ, while that is some of your account, I assume for most people own parts of those indexes, it's not your account. They get negative about that. And the news does play into that a little bit. And but like you said, it's short-lived. I didn't know so many people were down on the economy. I kind of thought, well, maybe they're down because it's an election year, or because inflation, or this or that. But when you really look at everything, there really isn't a reason to be negative, if you will, about the United States and the economy. I found this interesting when you sent it to me. I always know there's some negativity in the world, but for so many people, like this article mentions, to be negative was kind of a shock to me. And it does go over different. Obviously, everybody's family dynamic and situation is different. I get that. Somebody in here, it said that they had to move, and due to the move, I don't know if they moved multiple states or something, but they had to dip into their retirement and emergency savings to a sum of $450,000 just to make everything stay afloat. So obviously I don't know their complete financial situation, but I just found this kind of interesting. Was like, wow. Somebody talked about how they make $200,000 a year, but they can barely afford the groceries. I don't know everybody's their situation, obviously, per se, but
For sure. I think that is a good point. And, I think those are challenging decisions that a lot of folks have to weigh. So, you may move for a job, but like I think in the example you're citing, I think is what those folks did. What are the financial consequences? I mean, you're getting maybe a bump in salary, but you're having to wipe out a chunk of your retirement savings to afford the move. So that goes back to that technique of envisioning, how that's going to affect you in the future. And you're just curious if those people did that or not. And that goes, that could even go back to shifting your investment account to cash. I mean, or you're withdrawing your retirement account. Let's just say you took it all out. How does that affect you tax wise? I mean, you're maybe trying to be conservative, but if you're creating a colossal tax bill, what have you really accomplished? So there's a lot of different scenarios, but I guess the biggest takeaway is getting folks to envision their short term, their recent decisions. How's this going to affect you long term, and be able to meet your long term financial goals.
Another article you shared, an article about a gentleman who, and I'll let you elaborate, but he stopped watching the stock market for like, what, 7 months?
I think so.
A year?
Yeah, very respected columnist. He, I believe it was 7 months in 2023. He stopped watching the stock market and totally changed his attitude and outlook on things.
What a year to not watch the stock market.
I know.
Well, it even gives the months in here when he didn't watch it and what had happened. You know, how he didn't even realize the pullbacks there during the summertime and the, recoup in a 3-week period that he didn't even notice that. I don't know what, it sounds like he was selling a book or something. I think that's what he was doing. He must have been too busy to pay attention. I just think that plays in. I've known some people who don't even have a login to their account, like at work or even accounts they have with us. Like they have no idea. And then they come back and wow, I made how much money? Yeah. It's like, because you didn't look at it every day, which is easier said than done. I mean, with apps and technology, like we've said, you can pull up your account instantly on your phone. So I also found this one very interesting as far as eliminating this part of your life and then coming back later to see how much money you've made.
Yeah, absolutely. I think it's a good lesson, and if people can have the willpower to do that, I think it would be really beneficial to them for sure. So we've kind of discussed all the odds and ends of, why, despite a lot of strong economic data, that a lot of folks have been down on a strong economy. I guess in closing, is there any other major points we can give people today?
Yeah, I think, and you and I have gone back and forth on whether we're going to bring this up, but I like to go ahead and bring up the election because I have a very interesting report, which is from Capital Group, American Funds, as most people know. And they have a report that shows every election year since the first election and the outcome in that year and how the election affects the stock market. And, everybody kind of thinks that, well, if their party's not going to win, it's going to go down, so we're going to be apolitical here on the podcast. Absolutely. But just to share some hard, concrete evidence, they illustrate a $10,000 investment. So if you took $10,000 and invested it in, let's say, 1936, so that's an election year. You invest $10,000 at the beginning of the election year. 10 years from then, what would the account be worth? Your $10,000 turned into what? Well, in 1936, if you invested $10,000 in 10 years after that election year, you'd have $27,723. Well, that's a Democratic year right there. Okay, let's go a little 7 more years. We've got a Republican year. You invest $10,000 in 1952. In 1961, you have $46,000. And it just goes down. I wish I could show this just every year. And there's an equal amount of Democratic and Republican presidents in here. So it's just trying to say that it doesn't matter what's going to happen in November, whether your party wins or not. If you stay in it for a long term, like we've been talking about, then you're going to have a positive gain from that. So I like this. I think a lot of people are negative this year because it is an election year. Happens every 4 years.
No, I think that's a very good point. I'm glad you shared that for sure.
So, well, another one, just to illustrate kind of what we've been talking about as far as negativity, maybe even trying to get in and out of the market because of the negativity. Another fund from American Funds is the American Balance Fund. Full disclosure, we're not pushing this fund, just for example. But in 2008, it was down 37%. In 2009, it was up 26.5%. And then every year until 2018, it was up. It was a positive. Just illustrates if you stay in, you're going to have your money back in 18 months or so.
Yep.
You know, most people who stayed in 2008 made their money back in about an 18-month period. And so I know that's hard to stomach when you're in that environment, but it does pay to stay in and not react negatively to the news and other things that are going on in your life.
Absolutely.
Well, Tucker, we always leave everybody with some action items. Would you like to start us off?
Absolutely. And I feel like we've said this a lot. So we're I hate to say beating a dead horse, or if you're going to the Amarillo Zoo, not beating a dead mule. But I think the biggest action item is for folks to try to not get caught up in the short term and make sure that they're making a long-term financial plan for whatever their financial goals are, whether that's retirement, saving for your kids' college, whatever it may be. And if you do that you're also not watching those accounts on a daily basis and not reacting and not making actions in those accounts based on short-term events either. So that's my biggest takeaway.
I'll piggyback off that and say if you have this problem, you probably should delete the app on your phone for a while and see how that goes. I mean, give it a week, see how you feel, and just kind of build on that. I think you'll be very surprised how you feel at the end of all that. I'm not saying completely forget about your investments, but if you've given it to a professional, then you probably you shouldn't have to worry about it as much. And then do we want to give them a third one?
We can. I hope you know what the third one would be.
Yeah. Oh, you're hoping I would? Okay, I'll give you this. And I wrote this down for the show notes. But so my grandfather started in about the 1980s, early 1980s as a stockbroker. And, back then they did not believe that the market would go to 1,000 points. It was just unheard of. And the market's currently in, March 29th of 2024, we are at 39,807 points 40 years later. So I think that just proves that if you are pessimistic about the market, you have a high potential of being wrong, and that you have some strong evidence to be optimistic. Is what I would say.
Absolutely.
So.
That's a good point to leave people with for sure. So I knew I could count on you to come up with the final solution. Yep, bring it home for us.
Well, you take care.
Hey, you too, Stephen. Thank you. See ya.
Stephen Jones, Certified Financial Planner, 717 Wall Street, Norman, Oklahoma, 73069. Tucker Lee, Wealth Manager, 420 4th Avenue, number 26, Canyon, Texas, 79015. The views depicted in this material are for information purposes only and are not necessarily those of Cetera Advisor Networks LLC. They should not be considered specific advice or recommendations for any individual. Neither Cetera Advisor Networks LLC nor any of its representatives may give legal or tax advice. Cetera Advisor Networks LLC. Mutual funds and exchange-traded funds are sold only by prospectus. Investors should consider the investment objectives, risks, charges, and expenses carefully before investing. The prospectus, which contains this and other information about the investment company, can be obtained directly from the company or from your financial professional. The prospectus should be read carefully before investing or sending money.